Morning, Hadyn. How are you doing today?
Morning, Gary. Yeah, very good. Thanks for asking. It's another cracker Wednesday and ready to get stuck in.
Wonderful. Hadyn, the last time we spoke was about 2 weeks ago, and the rand was sitting around about 14.90s to the dollar. When you look at the markets today, we're pretty much in the same sort of ballpark, around the 14.90s, 14.95s. What's happened in the last 2 weeks with regards to the rand?
Yeah, well, Gary, it has been 2 weeks since we've spoken, and if you look at the exchange rate 2 Wednesdays ago versus today, it's a couple of cents apart, and you'd think that nothing's really happened, but it's been anything but. In fact, we've had a bit of a roller coaster ride, going as far out as 15.57 to the dollar as our worst level, and pulling all the way back to 14.79. So that's quite a wide range, and there's been a number of factors, mainly international, but it's been anything but boring for the rand, that's for sure. It's been a bit of a crazy ride.
So, I mean, it's almost like an 80-cent sort of range in the last 2 weeks. We'll get onto the events tonight, but maybe a little bit more about what was the catalyst that made it so volatile over the last 2 weeks?
Yeah, absolutely. So, tonight we've got a major event, and we'll speak about that later on. But the past 2 weeks, and pretty much the overriding theme for the past few weeks has been the story about the US longer dated bond yields. And by longer dated, I'm talking about their 10-year treasury or their 10-year bond, which is the key bond return that the market looks at when it's getting direction in the currency market and various other markets. And that bond yield has suddenly spiked. It went from below 1% in January, I think 0.5% at one point, up to 1.3, 1.4%. And then all of a sudden shot up to 1.62%, which sounds low, but it's quite a big move percentage-wise. And that has spurred dollar strength and hurt the rand. And just after we spoke last time, I think we spoke on Wednesday, the 3rd of March, Thursday, the 4th, and Friday, the 5th, we received, or the rand received, a pretty violent double body blow from the States, which sent us out to the 15.57. The first came from Jerome Powell. Jerome Powell is the head of the American Central Bank, the Federal Reserve, or the Fed as they're known more commonly. Jerome was speaking at a virtual event held by the Wall Street Journal on the 4th of March. And he was widely expected to address the rise in bond yields that had been happening at the time due to a sell-off in the bond market. He acknowledged the bond move, the yield move, but he didn't really say anything about it to calm the market in the sort of the vein that the Fed is going to do anything to curb these yields. And that just sent the bond yields going higher and strengthened the dollar and sent us out to around about 15.30 on that Thursday, the 4th. But all was not lost, or so we thought, because the very next day we had the monthly jobs data coming out of the States. The first Friday of every month, they release stats for the previous month around new jobs created in the States. Up until that point, previous jobs reports from the US had been rather weak in nature, and that underlined perhaps a disparity between a strengthening economy but a rather weak labor force. And a weak labor force has always been dollar negative, because when you have a weak labor force, the Fed definitely is not going to hike interest rates. So we thought that was going to happen again on Friday the 5th. They were going to get another bad jobs data release. Turns out not the case. Not only did they beat expectations, but they almost doubled the number of new jobs that the market was forecasting. So Thursday, no help from Jerome Powell. Friday, no help from the jobs data. By Friday afternoon and into Monday morning, we really were up against it, and we're sitting at 15.57 to the dollar.
Sure. So, I mean, 15.57 is a bit of a shocker from where we were in the past, but we've come way back down to 14.79 at some points. How was that possible?
Yeah, it was, and this is usually the case in the financial market. When you have a violent move in one direction, more often than not, it's met with an equally or almost as violent reaction in the other direction. purely because the first reaction is usually knee-jerk in nature and perhaps a bit overdone. So difficult to explain why we came back so far, 1557 to 1478. I mean, it's a massive move, especially when you consider that US inflation fears are still in place, that US bond yields are still elevated. You know, the factors that sent us out are largely at play still. But there were one or two little items that did help us pull back. Firstly, and while local headlines really do struggle to move the market, just because we're a small economy, the rand is an emerging market currency that's by and large follows the rest of the emerging market currencies pretty much like a tide going in and out. But on the Tuesday, that will be Tuesday the 9th of March, so the Tuesday following the points we just spoke about, we received our fourth quarter 2020 GDP print from Stats SA here in South Africa, much better than the market was expecting. We all knew that SA was coming out of a difficult period in the first and second quarters, thanks to lockdown restrictions. The third quarter was a blowout quarter, as we expected, because that's really when things opened up. But that was expected to tail off in the fourth quarter. Not the case. Economic activity was robust. That meant that our annual GDP contraction, and I must stress the contraction was bad. It's in fact the worst on record at -7% contraction for 2020. But -7% was a lot better than what the market had forecast at the -8s and -9s not too long ago. And it was a classic case of bad news not being as bad as it could have been, and that supported the rand. So that helped us come back. 10-year bond yields also came back from 1.61, 1.62% down to around 1.5%. And then also importantly, Janet Yellen in the States, she's the head of the Treasury, or called the Treasury Secretary in the States. She looks after their bond market to a degree. She came out and said that they've got all the tools necessary to curb bond yields and deal with inflation if needed. Not to say they're going to do it, but if needed. And that calmed the market, perhaps made the move the week before an overreaction, and that brought us right back down to the 1470s.
Fantastic. So I think this brings us to today. What's happening later that can throw a cat amongst the pigeons for the rand?
Yeah, we've got a big one tonight, completely out of our hands. The rand is in the hands of Jerome Powell once again. Jerome Powell speaking after the US Federal Reserve's monetary policy meeting. It's a 2-day meeting held every couple of weeks or every few weeks. And Tuesday and Wednesday this week were the dates. And the financial news outlets across the board are really, this is the only thing they're reporting on. What is Powell going to say? Typically, these monetary policy committee meetings are rather boring in nature. Monetary policy moves at glacial pace, and the Fed in particular, just because what they say moves the dollar and therefore impacts the world, they really have to communicate far in advance what they're thinking of doing so that they don't surprise the market. They've been caught in a pretty tricky position because, to a man, the Federal Reserve members of late have been saying the same thing, that US economic recovery is underway, but they've got a long way to go. There's no need to change monetary policy at any time in the near future. In fact, they've been talking about only thinking about hiking rates after 2023, which is quite far down the line. The challenge that they face now, however, is that economic recovery in the States is far outpacing anything that anybody ever thought possible. I mean, just this time last year, it was all doom and gloom and the world was going to end. And it was going to take years and years and years to get anywhere near pre-COVID levels. Right now, the consensus is that the US is going to grow at between 6 and 7% 2021 alone, and then 3 or 4% next year. They're going to get back to full employment, i.e. pre-COVID levels of 4 or just under 4% unemployment rates next year. And this has sparked fears about inflation. It sparked fears about the Fed having to act sooner than they have told us. And we'll find out tonight. Is the Fed going to stay the course, or are they going to hint at changing policy anytime soon? Personally, I don't think that they're going to do anything, and a lot of the analysts out there don't think they're going to do anything. But it's such a tricky position that anything that Powell says is going to move the market, just because there's so much anxiety built up around this. And I think a quote that I put in my my Forex, my daily Rand reports yesterday, I took a quote from the chief investment officer at BlackRock, the CIO for fixed investment. BlackRock, obviously the biggest money manager in the world with $7 or $8 trillion under management. And Rick said quite clearly, the world's going to hang on every word that Powell says. If he says nothing, that's going to move the markets. And if he says a lot, that's going to move the markets. And tonight is going to be March Madness, as Rick called it. So it's around 7 or 8 o'clock tonight, so well after our market close, and we'll see the effects tomorrow morning in the Rand. But it looks like it's going to be fireworks at the end of the day.
Sure. Well, Hadyn, thank you very much. I'm not going to put you under pressure and ask you to give me a number as to what you think it's going to land at, but we'll definitely catch up next week, Wednesday, and find out a bit more about what actually transpired and a way forward. So sure. Thank you very much for your time. Is there anything else you want to talk with, Hadyn?
No, the saying is make the trend your friend. And the trend of late is every time that Powell has spoken, the dollar has strengthened and strengthened significantly. That's not just Thursday the 4th, a couple of times before that as well. So we'll see if we can snap that trend tonight. Hopefully from the Rand's perspective we can, but it looks like we might be in for a challenging night.
Yeah. Well, thank you very much, and we'll catch up soon.